What is going on, investors? Hopefully, you guys are doing well out there. The last of the big mega cap tech stocks to report was none other than Apple. Ticker symbol AAPL, not only the biggest mega cap stock, but the biggest stock by market cap, coming in at $2.65 trillion over the last year. Shares of Apple are basically flat. Year to date, though, have caught a bid, and we'll show that to you when we come over here and look at this from a technical perspective. We are butting up against highs that we made back in 2022. Can we bust out and get over them? Because I tell you what, that would be a breakout on the momentum side. Talk about that more here in a second. But we've got to get into these Q2 earnings, which again came out after the bell for Apple. Revenue coming in at $94.84 billion. That was a decline of 2.5% year over year, but it did beat expectations on that revenue side by about $2 billion. Wall Street was expecting a decline of about 4.5%. Again, the company coming in at $94.8 billion. Wall Street consensus was much closer to 93, the low end south of 90, the high end close to $98 billion. I want to know what they were smoking. So the fact that the company was able to come in just above expectations in the most recent quarter probably bodes well for the upcoming quarter, coming in at about $84 billion. That would represent essentially flat or just marginal growth year over year. And things are probably a little murky to look out into Q3 and Q4, but obviously Apple's products, as the year goes on, they release a new phone, tend to release maybe a new iPad, a new Mac, and maybe some new wearables. So we would assume that should spur some sales as we go along. Now, from a company investment perspective, they announced another $90 billion buyback. I don't want to just brush that over like it's nothing. $90 billion on a buyback is more than 99% of what most companies are actually worth. This company is going to be buying back $90 billion worth of its share. They also raised their dividend by about 4%, which when we get over here to the financials, they could have done it by maybe 14%, shoot, maybe even 40%, but you are now getting 24 cents per share. This is an excellent dividend growth stock, although I think they probably could do a little bit better than that. Again, from the revenue expectations, looks good for the upcoming quarters. And then when you bolt on a $90 billion buyback, well, that will bolster up your EPS in subsequent quarters as well. Now let's get over here to the numbers. Some interesting things. We'll talk about the revenue, we'll talk about the profits, but we'll also talk about the geographic segments. On the conference call, they isolated the country of India. And if you follow our Fang Stock Recap show on Fridays, India is a key market to every single tech stock, particularly when it comes to Amazon, I think, but also Apple as well. It's a country where, yes, there are people using Apple devices, but it's a country with incredibly young demographics, and a lot of those young people are going to grow up with more wealth and higher standards of living than their parents did. And from a geopolitical perspective, India is kind of in that sweet spot, whereas China can be a little bit risky, as you guys can see. Total net sales coming in at $94.8 billion, but on the product side, we see a pretty steady decline from $77.5 billion down to close to $74 billion. The services revenue came in just slightly above Wall Street expectations at nearly $21 billion last year. You were at 19.8, so you're still seeing, despite the fall off on the product side, you are seeing service sales continue to go up. That should be a good thing. Now, cost of sales should come down. You have a declining product sales number. Also, you should have some, what I would refer to probably as disinflationary impact on some of the commodity prices and the raw materials. That should reduce some of your product side. Also, the shipping and those types of things have largely cleared up to where they were a year ago. On the services side, you spent just $6 billion to make 20.9. That's why, if that continues to grow, very, very good. So on the gross margin side, you made about $42 billion last year, just marginally higher, about 42.5. Now, the operating expense side, what I did notice is on the selling general administrative side, when your revenues go flat, that is where you like to see a flattening out, and it's almost to the dollar flat year over year. But this company continues to invest in R&D. And what the heck are they investing in? I don't know. The phones look the same as they did 4 or 5 years ago. The AirPods are about the same. The chips in the computers have gotten a lot better, particularly the switch from Intel, but we are now back to kind of incremental changes on the M1, M2, and I'm assuming M3 by the end of the year. But this company is bolting on over $1 billion to their R&D. So we have to expect, are there some AR, VR goggles? Is there the car coming? What is coming for Apple? Because they went from 6.4 up to nearly $7.5 billion on that R&D side. You got to expect something coming pretty soon. So if $94 billion, we'll even call it close to $95 billion worth of net sales, $28 billion flows down to the operating income side. Last year, you flowed down closer to 30. Pay some taxes, you generate some income on that mountain of cash that the company has, and the net income number coming in at $24 billion last year, you were at 25. Here's the evidence of the buyback. We'll see more evidence of that when we get down to the cash flows. Look at this, 16.4 million shares outstanding, all the way down to 15.8, and they're going to do another $90 billion. And so if this stock has some kind of meaningful pullback, that will actually be a good thing for the buyback because they will be able to retire even more shares over at Apple. Now, they give you reportable segments by the countries. America down year over year. Europe largely flat, actually up just marginally. Greater China held up, and this is probably a good thing. This is a better number than I was expecting over there. Japan largely flat, and rest of APAC also up just marginally. And again, the company really isolated India on its conference call, not just from a sales perspective, but they're obviously transferring and transitioning a small amount of their manufacturing capabilities to the country of India as well. You get your net sales by category, and obviously iPhone's doing pretty well, just up fractionally, but obviously the big drops that you've seen year over year is in Macintosh and iPad. Again, as this company shifted away from the Intel chips, which were in the Macintosh computers, and they were running, I believe, the iPhone chip in a lot of the iPad models, they switched to that M1 model, and they started putting the M1 and the M2 chip in iPad as well. And so you saw this big, gigantic performance boost, and anybody that is a Mac head or like really loves Macintosh computers, they all upgraded. Okay, everybody upgraded, myself included, and now the computers are so good, you don't really have to upgrade if you don't need to. There was obviously also that big push during 2020 and 2021. People started working from home, got bonuses from work, had to upgrade their equipment. The life cycle of that equipment is obviously more than a couple of years. And the question that we have to ask as investors, is this downward cycle over? And we got some clues when we heard Intel results and also AMD results. And I think we're getting pretty close. I think we should probably still have year-over-year declines, but I think as we look out into next year, and that's what you as an investor should always be doing, you should be always looking at least 6 to maybe 8 months ahead. And in this case, I think we can look 12 months ahead and say, well, yeah, Mac sales and iPad sales will probably rebound this time next year. Wearables basically flat year over year, and again, your services revenue up. The balance sheet is a thing of beauty. You got a mountain of cash on the current side. I don't know of any other company that does it this way, and I could be wrong about this, but they have this non-current asset as well, and these marketable securities down here. This is another $110 billion. So you have, what's this, about 55 and change? This is 55 billion and some change on the top side of the asset side, but something non-current side, I'm assuring this is some kind of CPA or some kind of regulatory thing that they've got to put this down here. They have another $110 billion just sitting down here. More interesting than that is your inventory number. This goes back to September to here into April. You do have a stacking up of inventory from 4.9 billion up to 7.5, but again, that's not comparable year over year. And with slower sales, you probably would expect maybe slightly more inventory build. They've got about a $10.6 billion worth of debt due relatively soon, and another 97 here on the liability side. Again, this company has effectively net over $55 billion worth of cash, considering they have $10 billion here and another 97 in the term debt. Now, here's where things get very beautiful when it comes to Apple is the cash flow statement. This, since it's Q2, is a 6-month view. Last year on a net income basis was $59.6 billion, $54 billion. Again, if you're new to these financials, net income is the bottom line. In fact, they put 2 lines underneath net income. Okay, your top line is your revenue after you pay everybody, the government, your employees, your suppliers, everybody, the bank for any kind of interest or anything like that, you get a net income number. And so what they're doing is they're pulling down a 6-month net income number here, and you pull that down into cash flows. And you see here year over year, we went from, call that close to $60 billion down to about $54 billion. Now, you get to add back in things like depreciation and amortization. That's just a kind of a CPA thing. It's not actually cash. Share-based compensation, again, those are shares of Apple, which we'll show you here on the financing side, end up getting bought back and then some. Accounts receivable gets to be added back in because you assume that turns into cash at some point as well. And you see year over year, $75 billion down to $62.5 billion. But I don't want to just brush over this. This is positive operating cash flows for a 6-month period of time. Apple produces, yes, it's down from last year, down from $75 billion last year. How many companies do you actually invest in and that you know of that are worth $75 billion? Okay, we're talking about an entire company. How many countries are producing positive $75 billion in cash flow in 6 months? Certainly not the United States. Apple is doing it over the course of 6 months. And while, again, it is down year over year, still rather impressive. From an investing side, net, they didn't really do a whole lot. Here's where things get beautiful for you as a shareholder at Apple is they paid $7.4 billion worth of dividends. And again, they raised the dividend they announced in the after hours up another 4%. So essentially you got a 4% raise if you own the stock. But here's the repurchase of common stock over the last 6 months, just $39 billion worth of stock bought back over the last 6 months. Last year, they bought back about 43. So I love companies that do this. You look at Microsoft's cash flow statement, they have an excellent CFO as well. As you'd expect, the world's richest companies can hire fantastically good CFOs that probably have an amazing team behind them. So they produce a positive $62.5 billion worth of cash flow running the business. They burn through just $874 kind of trading paper back and forth and maybe doing a little bit of property, plant, and equipment. Apple doing just $6.7 billion. And they come back here and they rebuy the stock. They pay dividends. They pay some term debt and they burn through. They're essentially cash flow neutral. Cash increased just $2.1 billion. And I say just when you're talking about a $2 trillion plus company that's doing $80-90 billion in revenue, $2 billion, they could drop it on the ground and nobody's going to notice. So the company is doing a beautiful job, especially in an inflationary environment and a high interest rate environment. You want to have as little waste of cash. You either want to be paying debt, buying back shares, investing in your business, having no leftover cash. And that is what Apple is doing, and it's a thing of beauty. And that's the bottom of the financial seat, guys. And when you get over here, look at this from the technical perspective, like a lot of stocks that we've been looking at, it's gone parabolic. And now we are retesting highs that we made back in December of 2021, another high that we made in April of 2022, another high here that we made in August. Now, all along the line, they've gotten lower. And so what we're looking for Apple is to probably breach these highs that we made back in August. That would take us up to the 170s. And again, in the after hours, the stock is up about 2%. Keep in mind, the stock was down about 1% during the regular trade. So over a 24-hour period of time, we've really only moved about 1% on this stock, which is really nothing. And so until Apple can confirm that it gets over this clumps of highs, I have to assume, folks, that this lower series of highs is probably going to hold. We're going to meet some resistance here, and we're going to start to pull back on Apple. How deep that pullback gets certainly remains to be seen. That is what, if you were to ask me today, what I would anticipate. The other scenario, and probably the one that's more exciting, since many of you, like myself, have really no interest in selling a stock like this, particularly with the buyback and the increase in the dividends. No real reason to sell this stock, even if you want to take some profits up here. Certainly wouldn't blame any investor wanting to do that, is if you continue this momentum upwards. Because with Apple, once you get above this 175 level, probably even more specifically above the 180 level, there will be an absence of sellers above there because the stock just simply has never gotten up there. And oftentimes when that happens, Apple will be in the news. It'll be making all-time highs. That's when retail tends to pile in. They tend to pile in the top and they tend to push stocks up at that level. That's actually where I would think about selling or trimming a position Whether or not I end up doing it, I am not exactly sure. This is my largest holding from a dollar perspective, but largely because I've been holding it for 10 years, and the performance over the past 10 years with Apple is just up 930%. And so it obviously makes it one of the best performing stocks. That is what we are monitoring over the next, I would say, the next 30 days. Can we get above 175, 180? That should create kind of a blow off top perspective, if you will. If we get rejected at these areas, should create some buying opportunities lower. I wouldn't get excited about this one until you get south of 150, because again, you've got a pretty healthy price to earnings on this one. Price to sales are pretty healthy based on the revenue growth that we're seeing for upcoming quarters as well. You more or less need a new product to come along for Apple, and whether or not they're going to deliver it certainly remains to be seen, although based on the company's track record and their ability to market and spend money, chances are good one is coming eventually. Hopefully you guys enjoyed today's video. That was the last of the FANG stocks. We do have NVIDIA about 30 days from now. We'll be here to cover that for you, and we'll join you again tomorrow for the FANG stock recap show. Hopefully you guys enjoyed today. We'll be back soon. Good luck with your investments.